I'd like to invite now Paul, Randall, and his panel colleagues to come onto the stage. Before the lunch break, we heard about innovations and new trends to watch in the credit information market. We went on this tour. Now we want to give the floor to people that have put some of those innovations into practice. Paul will facilitate this session. Paul celebrated recently 15 years at Creditinfo Group, where he's now the CEO. But he has over 30 years plus of experience in the industry, supporting credit providers and working directly in banks, retailers, and non-bank lenders. So Paul and colleagues, you have the floor for the next 30 minutes. Thank you.
Thank you very much, Enrique. Good afternoon, everybody. Hopefully everybody's had a good lunch and ready. We're going to have a bit of a roller coaster ride now when we've got some short, sharp shocks coming up with discussions on some topics. Actually, approaching this, I was reminded actually of the founder of Creditinfo, Randall. And when he built the credit bureaus, first in Iceland and then across the world, constantly in his mind was about what is the really relevant and appropriate information to help make better decisions, and where can I get that information from? And really, I think this is a strong theme in the discussion we're going to have today, not necessarily in this case about credit bureaus, but about four very entrepreneurial companies that are thinking about new sources of data to support decisions. Those decisions may be quite varied, but really to bring that forward to you. So each of them are going to have a brief session, and then we'll have questions at the end for those. And we're going to start off with Paul Peyré, who's the co-founder and chief risk and data officer at Algoan. I won't give any more introduction. I'll let him take it from here.
Thank you, Paul. I'm another Paul with a stronger French accent. So effectively, I'm co-founder and chief risk and data officer at Algoan. Algoan is a French fintech, and we are actually providing a credit decisioning API based on open banking data. And with our technology, we are helping lenders to drastically reduce their cost of risk. So currently, we are 50 people. As I said, we are French and we are based in Paris, but we are operating in 7 countries. And our clients are mainly a big financial institution like BNP, Société Générale, ONE, or big fintech, and especially fintechs from the BNPL fields like Pledge, Alma, and we have Solaris Bank as well, but it's not actually a fintech. If we move to the next slide, yes, to start from the beginning, our ambition is to make the credit sector fairer and more responsible. So I'm not going to say anything very new, but the idea.
Well, just one moment. We haven't got the slide on behind you.
Well, I will continue. I think it will arrive.
Okay.
Yeah, just saying that fairer means being more inclusive, being able to serve the underserved, so especially the younger generation and the thin files. And more responsible means being able to fight against over-indebtedness and to prevent from over-indebtedness. And I think this is something particularly important currently in the BNPL sector. So with this ambition in mind, we've developed an API. So it's an application programming interface aimed at credit decisioning, which is global and which is easy to integrate, and which is aimed principally at consumer loan origination and buy now pay later scheme origination. Okay, so I'm seeing my slide, which is nice, but
perhaps if you just give it a second. Here we go. Okay, but perhaps you just go back to the previous slide and just people just remind them and before moving on. Thanks, Paul.
Yes, so making the credit sector more fair and more responsible with this global API, which is aimed at consumer lending and BNPL origination. So moving on to the next slide, having said that, so we've developed this API, and the specifics of this credit decisioning API is that it's 100% based on open banking data. So the input for our technology is a minimum of 3 months of bank account history. And with this data, we provide 3 types of outcomes: credit insights, credit score, or payment score. Credit insight is our categorization engine. So it's aimed at categorizing, labeling each single transaction in this open banking data. It's a categorization that is specific to credit decisioning. So we don't care about restaurants or flower shops, etc. We want to retrieve all what matters to calculate a budget, to assess the affordability. So we're able to retrieve the income to assess whether this income is regular or not. We're able to retrieve the main expenses and the non-discretionary expenses. And on top of that, we are able to detect what we call the red flags. So typically a bank account seizure, excessive overdraft fees, or things like rejected payment or rejected monthly installment, credit monthly installment. So that's for credit insight. Credit score is a behavioral score which takes as an input 90 days of open banking data, and it calculates a probability of default over a risk horizon of 12 months. And the rating is ranging between 0 and 1,000. And credit score is for consumer loan origination. And we've built another score, payment score. The idea is the same, but the risk horizon is limited to 3 months, and it's here for split payments or BNPL schemes that are repaid in a very short period of time. That's our API. So now if we move to the next slide, we do believe that with this decisioning API, we can be a strong contributor to credit referencing, and that we can be a natural partner actually to all credit referencing agencies. A partner in terms of the data we provide. I mean, this open banking data, when enriched, is really complementary to more traditional sources of data. So the observation period is shorter. We're talking about a few months compared to several years. But the great interest of this open banking data is that it's very fresh, it's recent data, and it's very granular. The other thing that is interesting with open banking is that it's a global concept. There are plenty of countries in the world where there exists some form of open banking. And the format of the data is the same everywhere. It's a series of transactions, and for each transaction, it's a date, an amount, and a description. So the same format applies everywhere. So now, if you want to provide a global API, it's just a matter of specializing the algorithm. That's what we do at Algoan. We take care of that. We specialize the algorithm because obviously in France or in the UK, this open banking data does not mean the same thing, but at least the format is the same and connection to open banking is the same. And the last thing is that with open banking, we get extra information and clear insights that are not already embedded in the credit bureau data. And we think that with this data, with this open banking data, we can serve certain categories of population. So people without credit history, if they have a bank account and if there is some activity on the bank account, we can use that to score and to assess the creditworthiness of the credit applicant. So that's it for me. I think.
Thank you, Paul.
So
I think that's really great follow on from this morning where we had some discussions on open banking, and we saw the difference between where we looked at one credit bureau and then credit bureau plus open banking. So I think that's really brought that to life. Thank you. So next speaker is actually going to be online. So, it's going to be Onur Mutlu, who's online, who's the data product manager from COLENDI. So
hello. I think you can hear me, right? I'm sorry, Paul, if I interrupted.
Hi, Onur. Just give us one moment. We're just getting the tech right, so you're. I can see you, but everyone else can't. Just a moment. Yeah, you're ready to go.
Okay, thank you very much. Let me share my screen. So I just create the short presentation. Yep, can you see it?
Yeah, it's good.
Okay, my name is Onur Mutlu. I'm from Turkey. And
To interrupt, I can see it, but everyone else can't.
okay, should I wait or?
Give 1 moment. Yes, it's on
Yeah,
now.
yeah.
Okay.
Okay, great. My name is Onur Mutlu. I am working at actually my role has been changed. I am now data science team lead. I'm working for COLENDI. COLENDI is a startup actually, but we are at the top 10 company who gets the largest investment in the year 2021. So what business challenging are we solving? Actually, we are trying to solve the business challenges related to the to legacy banking. We are trying to help people to get investing a bit more where they are not able to use. Actually, I cannot see my slide. Anyway, doesn't matter. We are trying to help the people who have limited access to financing. We are trying to solve some challenges related to limited payment options, and we are dealing with some security concerns. And what innovation we are bringing is we are trying to broaden the payment options available to individuals and expand the payment methods that business can accept. Related to security, we are trying to solve some security concerns by integrating biometric security measurements into certain programs. COLENDI's program that remove many of the traditional barriers of obtaining funding can help smaller companies or specific individuals get the money they need to get started, expand, or achieve their personal goals. COLENDI helps to make financial industry more inclusive by expanding the range of financial services available and by broadening the access to financial services. COLENDI helps to expand access to investing to people who traditionally were reluctant to invest or communities that traditionally focused on using and saving cash. So we are actually helping people to get microcredits, and we are helping them to micro investment options. So related to credit reference agencies, as COLENDI, even though we have our own scoring engine, due to the certain operational intricacies or challenges and or nature of partnerships, we often end up developing natural business partnerships with credit reference agencies. However, this is not a situation that COLENDI is displeased with. Through these partnerships with credit reference agencies, we increase our ability to serve our clients better financial products, which subsequently allows them to provide better goods and services to their customers. And thank you very much. If you have any questions, I can try to answer them, or do we have a Q&A session at the end of the session, at the whole session?
Thanks a lot, Onur. We'll probably come back to the questions at the end. So,
okay.
So thank you very much for that and giving an insight on how you're supporting the access to credit for a different group of people and through a different means. So our next speaker is Sarah Lachman, and actually she's come from a very different perspective, away from pure credit, but really looking at the understanding of sustainable finance. She's the co-founder and head of sustainability at Greenomy.
Thank you, Paul. Thank you for the invite. So Greenomy is a Belgian startup. We have built the company 2 years ago. The objective of Greenomy, yeah, you can go to the next slide, please. Thanks. So we have created Greenomy.
Sarah, we have the same problem. Just
sorry.
Give yourself a minute.
Yeah, no problem at all. Okay, so just to explain a little bit about Greenomy, waiting for the slides. So we are now a part of the Euroclear group. So they have take some stake on us early this year. So it really helped us to grow from 10 people to almost 37 people now. And our objective is really to facilitate the implementation of the different EU sustainable finance regulations. So let's wait. So in order to have the image and follow what I am talking to. Good. Great. So the challenge that we are trying to help our customers is the burden of the legislation. So the EU Commission has published a new regulation regarding the sustainable finance regulations, such as the EU taxonomy, the SFDR, the Sustainable Finance Disclosure Regulations, and all these new criteria and data to be captured. If you can go to the next slide, please. Thank you. So who is affected? So almost everyone. So the companies that need to screen their activities, the banks that needs to compute their alignment with all this new criteria, the asset managers, the insurance, etc. So we are really working on creating the ecosystem that I will share with you in the next slide, please. So the idea behind Greenomy is that we have codified the different requirements from the different legislations into several portals depending on the stakeholder. If you can go to the next slide, please. So the ecosystem that we have created to be able to help these different stakeholders is first the company portal. So the companies can compute their alignment with the different criteria about the EU taxonomy, which is mandatory for them as from this year. And there is also another portal for the auditors to perform a limited assurance on the data completed by the companies. Then this data will be disseminated via APIs to asset managers to compute their alignment of their portfolio, or the banks, so the lenders, in order to be able to have an idea about what they are financing and the impact of the scores of these companies into their banking book. Can you go to the next slide, please? Okay, so despite the reporting, we are really helping the lender and the credit institutions to help their own clients in this transition to more sustainable economy, because we believe in, if we have a reliable and accurate, up-to-date data directly from the companies, it will really help the banks to channel better their funds, their loans, and all these loan applications to participate to a greener economy. Can you go to the next slide, please? So yeah, if you are interested to have more information about Greenomy, please do not hesitate to visit our website, and I will be very glad to help you with all your questions. Thank you.
Thank you very much, Sarah. That was a lot to take in, but really enlightening information on the sustainability challenges. So we've moved from credit to sustainability, and now we're going to move on to fraud. So let me introduce Frank Heisel, who's the Managing Director of Risk IDENT. And over to you, Frank.
Yeah, thank you very much for the invitation. I'm also waiting for my slides, but maybe I start and introduce Risk IDENT for the moment. So Risk IDENT is invested by the Otto Group. It's about 10 years old. We are 75 people in Hamburg, and we are strictly focused on fraud prevention for online businesses. Slides are there. Yeah, we are focusing a lot on large enterprises customer-wise all over Europe, but we have customers also worldwide. We do a lot of different industries. We have buy now, pay later providers such as Klarna and RatePay. We have large banks, Sparkassengruppe was mentioned. Today, we are obviously in e-commerce. You know, Otto is our mother company, but we're supporting a lot of large enterprises here in telecommunications, Vodafone, Telecom, Telefonica. So this is actually our business, and I'm going to talk about a little bit of, you know, the challenge of fraud prevention and possibly what you can do in the 5 minutes I have. So online fraud or fighting fraud is very complex. because actually you are not dealing with a situation where the real person and the identity use is the same. It's different. And even a single person, one person, can make a huge damage if it's just having multiple credit applications or online orders. I've seen examples, of customers which were really close on shutting down their business because they were frauded so heavily. And the fraudsters, how do they operate? They are obviously stealing identities. So there's also a lot of, damage to the society for consumers, which identities are stolen. And yeah, they're using fake identities and obviously account takeovers. There's multiple, actions fraudsters are doing. There are a lot of different patterns how they operate. It's different from industry to industry, but also very individual, and therefore also very complex to fight. So what do you actually do then to successfully, fight fraud? And it's the next slide, please. Yeah, again, it's data, right? I mean, this is the business. We are all in here. You need to have the right data, and this is a lot more than traditional credit bureau data typically, which is used. In fraud prevention, you try to particularly find data which is independent from the identity used. Yeah, surely you use all the identification data and PIIs and the credit bureau information, but of course you also are using like behavioral data, you're using device data, actually everything you can get rid of. There is a lot of data providers out there in the world which are not represented here. A lot of them are coming from Israel, from the US, to validate any kind of information and to provide every possible database existing here. And they do operate, in Europe also. And I feel they are not super heavily controlled. Anyway, and most important is when you have all this data available, you need to make connections between your given orders to all your historic databases. This is super important, and you need to do it in the right way and very complex. You need to understand, the networks and patterns fraudsters are operating with. So making this connection super important. And we're doing what everybody else is also doing, creating features, characteristics, combining them with artificial intelligence, mostly machine learning supervised models, combined with also rule sets, coming up with the most predictive scoring algorithms. And in fraud prevention, you also need experts. Super important that you cannot leave the system alone. It's not like switch it on and leave it alone. You have to have experts monitoring the system all the time, really understanding the domain, understanding the data, taking care of the models. Next slide. One example why it is important to also use data independent from the identity. Device fingerprinting is one example. Consider that there's one fraudster. Yeah? He's having multiple orders, in order 1, order B, order C, one after the time. And you will find out order A, order B, order C are all using the same device. And this is only that information alone. It's already something you feel like, okay, is this normal? Are these 3 individuals sitting in one flat or working together? And then it's going on and on and on. So alone, this mechanism helps a lot in fighting fraud. We as Risk-Scanner, we have a actually global pool with currently over 600 million devices in there. And we got from our customers also reported in if a device was involved in a fraudulent transaction. So in this example, even order A possibly could be the information there that some other merchant or bank was already reporting that this device the fraudster was using looks not good, right? So device fingerprinting is a very good tool, but again, in fraud prevention, there's not this silver bullet. You need to have a lot of mechanisms and also data you pull into your decision. Next slide, please. And then I'm also done. Yeah, obviously, if you want to make right credit decisions, you need to combine tools like device fingerprinting, but also behavioral analytics, stuff like this, with traditional credit bureau data. And we are partnering with credit bureaus a lot, and all of our customers are obviously using credit bureau information, traditional credit bureau information, together with fraud solution providers like us. And again, I want to point out, we had this discussion earlier today, about now the big tech companies from the US like Apple and Google, and they are moving, into our domain, risk management, and combining all data, and how can they get regulated? But the reality is there are already like hundreds of providers from, again, mostly Israel and the US, operating in Europe, and they just combine any kind of possible data. They have these terms like digital identity and stuff, where they actually combine all person-related data with shopping histories, with even behavioral analytics. And I also think we should include them into the discussion and the regulations, and not only see the super high tech and the traditional, but this is a very large economy. Coming to Europe, are already there. Thanks for hearing me.
Thanks, Frank. And just to echo in that, I think it's really great to see 4 relatively small startups on becoming more mature, really taking some great ideas forward. Any questions for the panelists? So I'll start. So if we're reading the news at the moment, things are probably not looking good in the third, fourth part of the year. How do you see that if we were to move into recession in Europe, how do you feel that this would be particularly relevant to your solutions? Anybody want to take it first?
Sitting next to you. So yes, what we see that the current economic crisis is characterized by a surge in inflation. I mean, currently that's what's happening. The inflation rate is increasing drastically. It's more than 2 times the average over the last decade, and that's something global. And the impact of that is the increasing cost of living for all households and the erosion of their purchasing power. So now, in terms of from lender and from a credit perspective, it means that there can be naturally some concerns regarding affordability and regarding how we can assess the affordability of customer in such context. So I'm not going to surprise you saying that I believe that the open banking data is provide a very good source of data to give clear insight in this context, because in this transactional data you have recent information regarding the financial situation of the household, and you are able to see the various expenditure, and you are also able to see the impact of the inflation on the budget of the end customer. But now the idea is to take that into account to make forward-looking assessment, and that's a strong recommendation that we make to our clients from the lending industry, to take some kind of stress and forward-looking stress when they assess the affordability. So in this open banking data, you have all the information, all the relevant financial information. You're also able to see the behavior of the credit applicant, his financial behavior, and to see whether to check his financial agility, I would say. But on top of that, the lender has to make sure that a remaining income of let's say 500 euros means the same thing today than 1 year ago, and then in the next 2 years. So that's what a lender should care about currently.
Thank you.
Hi, Paul.
Oh, sorry.
I'm sorry, there's a synchronization issue. May I answer, please?
Sure, go on, Onur.
Okay, as it's not something to be proud of, but I think Turkey has the wildest and the biggest recession in whole Europe. According to that, I think our new solutions for different payment methods and micro investment options, COLENDI will gain popularity, but in the long term, we should be very careful about the fraud and also the repayment of the credits. I think we are going to have a little bit of problem about it. Thank you.
With regards to fraud prevention, there's not this one type of fraud. So obviously there are international, mafia organizations that are quite professional people, but there are also very unprofessional acting people. And when it comes to recession and, people cannot pay their bills anymore, and we will see surely an increase in also soft fraud. People playing with that data, it's starting there, right? To get a credit and maybe to have the credit bureau not track them and being, someone else. And this is where fraud is actually starting. If you start your business or apply for credit already with the intention not to pay or not being payable. So we will definitely see an increase on that, and definitely, our systems can help with that. I mean, this is usually the most less professional approaches, how this people act, and we will surely see an increase here.
Sarah, thank you, Frank.
I will answer the question maybe on a specific issue, which is the energy, for instance. So now we are having critical energy issues here in Europe, and I think the idea of helping the right companies to work more on their renewable energies, and that the lenders have a key role to channel, all this, all the investments into these companies to help them be aligned with the 2050 targets that the EU has set up in the Green Deal. It's really, it could be really helpful, and that's why we are really trying to help our clients, banks such as banks, for instance, or credit institutions in general, to assess what investments are that they have within their banking loans, and what it's the impact of the money that they are investing in. And we are really helping them to use these funds to have a better impact, like in their societies.
Well, I think on a note of where we're talking about positivity in the face of adversity, I think it's probably a good moment to end the panel session. So thank you very much for my 4 speakers, and thank you for everybody for listening.